Bitcoin grinds lower amidst year-end profit taking. Hey guys, it's Keith Allen. Oh man, this market's getting tough to read. Definitely seems like the market is divided between FUDers and FOMOs and disciplined investors. So the question is, which one are you, or which one do you want to be? No question, things are getting tough to read these days. So we're going to take a look. You know, we often look at lower time frames to get some clues as to what's going on. But it's always a good time to zoom out and look at higher time frames and gain some perspective. So in this analysis, we're going to look at Bitcoin across different time frames to gain a better sense of where we might be in the cycle and try to determine if this pullback is part of a bigger developing trend or simply a byproduct of year-end profit taking. And with that, let's go ahead and jump into the charts. But first, real quick, if you haven't done so yet, do me a favor, hit that like button, hit that share button, and most definitely hit the subscribe button so you don't miss any of the streams in the future. Check that little bell up there in the corner on YouTube. Live chat also open on YouTube. If you'd like to join me, I would love to have you. I enjoy engaging with you guys. If you've got questions, if you've got insights you want to share, by all means, keep them coming. And with that, let's go ahead and share a chart. We're going to start on the candle chart today because it's just like, it's not stopping, right? We grind, it looks like we're going to recover, and then we grind even lower. I guess that by definition is what grinding is all about. So at the moment, we have slipped past the 50-day moving average. Certainly, this could be reclaimed by the end of the day, and that would be a big deal if it was. If not, then obviously what's coming into focus here is the top of this channel where we've already had actually more than that, 1, 2, 3, 4, 5, and now we're headed for our sixth support test here at that 91.6 range is the top of that channel. We lose that, then we're dealing with the bottom of the channel, which is around 86.6. And quite frankly, if we lose this, this has been tested a few times pretty strong up here. But if we lose this, this would really be kind of a last line of defense before a much deeper drop. This gets interesting for me because, technically you would look at this 100-day moving average. That's the blue one here, which is currently sitting at around, 79K. If we switch to the weekly moving averages, and the weeklies look a little bit better here because we've not even crossed below the 21 week moving average, but you see where that sits, right? Here's our 2021 top. We spent forever and a day trying to clear that, and we have a situation here where we also have a CME gap somewhere in this range, right? So we looked at the daily time frame. It was the 100-day is that right there at 79K, a little above 79K at the moment. And if we look at the CME gap where it's sitting at the moment, that gap sits between almost 78K and 80K. So I could certainly, if we get into this range of the gap, I would expect that gap to fill. Right. So I do have some bids down here just in case that happens. As you can see, price continues to degrade here. And what I had liked to up until this moment was the fact that we had a series of higher lows. Well, we still do on the Bitcoin spot chart, not so much on the futures chart. But even if you look at all these wicks below, right, this was at 90,742. Next wick was a higher low at 92,092. Next wick was a higher low at 92,118. So you have higher low, higher low. We're currently still there, but this is coming into focus very, very quickly. So it will be interesting to see if we can hold this higher low, $92,118, or if things are going to penetrate lower. And this is where it gets a little bit tricky. If you're looking at the TA solely at the technical analysis, then you would be concerned about losing this level here and wondering about the strength of these two levels in this channel, and rightfully so. So now let's switch over to fire charts where we can take a look at some of the liquidity and see if the liquidity supports the TA. And here we can see that we have, you know, we lost this big wall that appeared, or at least a big chunk of this wall that appeared the other day. That's been cut in half. And so once that happened, we saw price start to grind its way lower. And I think I posted, not I think, I know I posted something about this when it happened. It opened the door to grind lower. But in the past day or so, we've seen this ladder develop and get stronger here, this bid ladder. And that is a positive sign. Highest concentration sitting here at this 90K range. Maybe it extends down to 89.5, up to 90,500. And if we look at the chart I was showing you previously, this is at 91,688. So holding above this would be good, and it would have confluence with the, well correlated, in my opinion, with where the highest concentration of bid liquidity sits right now, right? So maybe we get into this. Incidentally, from where we sit right here, down to this level is about 180 million in bid liquidity, just between here and this 89.5 level. So that's a significant amount. And you can see it's pretty thin to the upside. So it isn't going to take much to send things back up. But, you just have to wonder what is causing this. And again, it is that time of year for year-end profit taking. So that's certainly something to consider. If we look at where the leveraged longs and leveraged shorts are, there's not a lot here on the long side. And you can see the low hanging fruit here on the short side. Actually, I should refresh this probably and see if this changes any. But it looks to me that if we're going to play this liquidation game, which is frequently the game here in Bitcoin, that we would see these shorts get punished and then potentially move up to these shorts. Well, it looks like that's changing. Gosh, it's changed again. It's just moved off my screen. So I guess that's the range at this point. So there's, if this is accurate from Kingfisher, and that's debatable. If this is accurate, then we certainly would expect to move back up into these mid 90s to go clean these leverage shorts here. Maybe what's happening now is maybe market makers are trying to attract in more leveraged longs to go back and punish them. But right now, there's no advantage to sweeping this because there's nothing to clear based on this data here. Interesting how much that's changed here in the last couple of hours when I had previously refreshed the screen. So back to the charts here, you see we're coming off, we've wicked down a little bit and price is trying to recover. But we've seen this happen time and time again through the day here, right? What I'm noticing in fire charts, and I'll go into the lower time frames to identify that, is we'll see these periods where price grinds down and then we get a bump up. We'll see purple whales start to buying. We get a bump up and think we're going to be in the clear. Then an iceberg appears, knocks price back down again. It happened here as well, where whales started buying again, and we saw price start to move up again. And again, we're pushed back down. So from the technical side, you would expect to potentially go down at least to this 91.6 level and potentially further. And from the liquidity side, it looks like we are in a range where Bitcoin should be bouncing soon. Very thin liquidity here to the upside. It's an easy push back up. Doesn't take much to push back up here at all because of the thin liquidity in this range. So really just waiting for that opportunity to happen. So, so what do you do? How do you trade it? Listen, if you're a trader, you love the volatility, right? But it is getting pretty tricky here. No question about that. What I like here in this chart is that we do have some solid bid liquidity down here, all the way down to 88. And then things thin out, right? Things thin out below 85. And that tells me that there's not at the moment, anyways, there's not a lot of sentiment to go much deeper. Um, right? Because if we did, I mean, we would push through this like nothing. We'd lose 85. We get to 80 very, very quickly. So I think, at least for the moment, based on the liquidity dynamics that I'm seeing right now, I would expect to hold in this range for the time being. And that's a footnote, right? For the time being, because I think this can change a lot. And I think that um, uh, these order book dynamics are going to change a lot over the next few days for sure through the end of the month, right? So what's going to happen Christmas? Is Christmas going to give us a gift? Well, be careful what you wish for, I would say. Last year we saw a lot of buying begin on Christmas that took us really on this ride. It was really when we saw a lot of demand coming into the ETFs. They were kind of front running the ETF launch. So I don't know that we're going to see that again this Christmas. The biggest thing in terms of what's going to happen market wide is going to be when Trump takes office. January 20th is inauguration day. Will that be a day for another Trump pump, or will it be a sell the news event? That remains to be seen. But obviously, we have a very crypto friendly administration coming into office on January 20th. We obviously still have good fundamentals in terms of the institutional demand, and something that will be interesting here. Looking at the far side data, we have had a couple of days of selling here, right? 19th and 20th, last 2 days, last Thursday and Friday were the last two trading days where there was indeed some selling. Notice that BlackRock did not sell on the 19th. They did sell on the 20th. Today, are they going to be selling, or are they going to be buying this dip? That's a question, and that's something that we should be watching here to see if those institutional investors do indeed have the stomach for it to ride the volatility, or if maybe they're going to be doing some profit taking here as well here. That may be the safe bet in terms of protecting your portfolio. You just have to, I guess, determine whether you're willing to risk not being able to buy Bitcoin cheaper, right? I can tell you I've been burned numerous times selling, hoping that I would be able to buy cheaper, and hadn't been able to do so. And so now I incorporated a DCA strategy, a dollar cost averaging strategy, where I will buy these, significant marks on the way down. So am I going to hit the absolute bottom? Maybe I will, maybe I won't on one of these, but I'm happy to just, dollar cost average my way down if that is if that's how things are going to play out. Now, where do I start to get concerned that this is potentially developing into a broader trend? Well, for that, I think I would look to the weekly time frame, and this could be an early indication. There's no question, right? This is not a sign of strength, but we do know a couple of things. We do know that historically there have been large corrections, deep corrections in the 20 to 50% range throughout the history of bull markets and Bitcoin. So there's that. The other thing we know is in terms of where we sit in the cycle. Oh, you like my little stars? I'll tell you what those are about in a second. Where we sit in the cycle is very early, in my opinion. So this, to me, is a positive that indicates that there's still plenty of time and room for Bitcoin to continue on its upward trajectory. Some consolidation is healthy. Pullbacks are healthy. Every bull market had big pullbacks, big corrections, right? So including the last one with the mid-cycle top, 55% to the downside, and then we went to a new all-time high. Okay, it can. I got to turn off this magnet tool. It can most certainly happen. Okay, so was this potentially a mid-cycle top, and this is the new top, or is this potentially a mid-cycle top, and we're going to go up, we're going to correct and go up from here? This all remains to be seen. The last real major RS flip was at this 2021 top, and then this one is trying to validate again here, right? Potentially this is potentially a really solid RS flip. If it happens, that would be a sign of strength. I personally am still looking for that deeper correction, and 20 to 50% or more is what I had on the books. It would, if we bounce here, that's only 15%. So if we made it to the bottom of this channel, we could squeak that at 20%, and that may satisfy some technicians. That may do the job, but it could go deeper. So where I start to get concerned is if we start losing these weekly moving averages, right? We lose the 20 week, then we're going to the trend line. That would just be, excuse me, not the trend line, to the 2021 top. And if we lose that, you really, depending on when this happens, this 50-week moving average could be at or above this 2021 top. So if this doesn't hold here, then that takes us to the trend line. And the trend line, of course, is the last line of defense, but it is still very, very much intact, as you can see. So we have no validation whatsoever that that this is indeed the cycle top. Certainly it's a local top, but we have no validation that this is the cycle top and that it's over. And so I would just caution you about getting panicked too early. Nothing wrong with taking some profits off the table. Nothing wrong with that at all. And I have certainly done it. And as have, a lot of people, a lot of the smart money is taking money off the table here. Something else I thought was interesting is I wanted to look at all the previous Christmases, right? To see if we got maybe there's a Christmas gift in there, because obviously look at what happened after this Christmas. Worth noting that Christmas Day was not really a big day of movement, right? It was December 25th was a 1.3% day. So typically those aren't high volume trading days and high move days. But they do kind of fall into a pattern here. And if we zoom out, we can see these are all the Christmas days. Obviously, sometimes they happen in bear markets, right? But we're in a bull trend right now. And until that trend is broken, I think this market is still alive. And so you can see Christmas back in 2011, price moved up after that. 2000, excuse me. Yeah, here we go. 2012, price moved up. 2013, there was a pump and then bear market followed. Same with 2014, was still in that bear. 2015, consolidation and then up, halving and up. 2016, bull market up, correction, and then back up. Another correction, another correction. How deep were these corrections? Let's see. 36%. Maybe that's a little aggressive. 32%. 42%. Okay, so this is a prime example of what I'm saying. We could have a deep correction like this and still be very much in a bull market. Here's 40% corrections in this market back in 2016, 2017, right? And that's when price went up to almost 20K. That was a monumental moment for Bitcoin. Things pulled back down to the 200-week moving average and then bounced. 2019, same situation. A pump, a dump. This was the COVID crash. I consider this an anomaly. I consider this a black swan. I don't think this is normal market behavior. Had it not happened, I think there would have been, this trajectory would have continued. And ultimately it did. 2020, same thing. Up we go. Not necessarily a high volume day on Christmas. In fact, let's get back to the daily and we can look at that. All right. These are typically not big. Christmas Day, not typically a big day of movement, less than 0.5%. back in 2022, 2023, 1.3%. And consolidation, pump, dump, and then up. And this is again in a bull trend. How deep was the correction? 22%. Okay, so I hope this illustrates for you that we are doing something that is very common. We're watching price develop in a way that we've seen develop time and time and time again. So be mindful of that before you panic sell. Be mindful of what's going on. Be mindful of where we are in the trend. Be mindful of what these ETFs do. If they continue to dump and dump and dump, then we're going to continue to see price grind down. But nobody's calling these guys the smart money, right? At this stage, if they were really the smart money, they probably wouldn't be buying ETFs, quite frankly. That's not to say that there's not some savvy investors in there who just don't necessarily want to deal with the counterparty risk of dealing with exchanges, or all of the minutia that goes with that. They're comfortable trading where they're comfortable, and also, a lot of the smart money is just patiently waiting for the regulatory environment to take shape, which obviously seems to be on pace for once the new administration takes over. So those are all things to keep in mind before you panic over what you're seeing in the charts now. I'm going to leave you with a parting shot here of fire charts. Again, we've got liquidity building in this area, which looks good to me. We're seeing a bit of a game of cat and mouse, if you will. It looks like we're in the clear, and then an iceberg shows up and knocks price back down. But you can see that there's not a lot of near range liquidity to hold price down, with the exception of the iceberg that just came down on top of us. But that's less than $5 million, right? So it's easy to get through that. I just think that they're trying to grind this down a little bit lower, take some of this liquidity, potentially attract more longs. I think that it's really a matter of trying to attract more longs in this liquidation game, and go from there. Looks like my StreamYard is having some issue with streaming to some of the streaming to X. So hope that's not messing you guys up too much. If not, I'll share the YouTube version on X later today if I get a chance. All right. With that, I'm going to wrap it. Wishing you all a very, very, very Merry Christmas and Happy Hanukkah. Best to you and your family throughout the holiday season. I hope you enjoy it. I hope you'll spend a little time backing away from screens and spending time with the people you love. That is my plan indeed. And we will be back with some more analysis before the end of the year for sure. But definitely going to be spending a lot less time in front of this in front of these monitors here over the next week or so to recharge a bit and spend some time with the family. I'll leave you with one last parting note, and that is that if you're interested in any of the tools that I'm sharing with you, they're currently on sale, but not for long, at materialindicators.com. 33% off every plan, including monthlies, which rarely ever happens, and also including lifetime subscriptions, which also rarely ever happens. Those two order classes, or subscription plans, I should say, almost never go on sale. Take advantage of it now. Use promo code MyHo33 for 33% off. Don't miss out. That deal's about to go away. Have a good one, everybody. Merry Christmas.